All right, folks, I wasn't going to do the midweek recap because I'm mentally exhausted. These chop fests, they can be mentally tiring, but I got to do the update. And what kind of friend would I be if I left y'all hanging? So, here's what's interesting about today's session. Kind of a mirror image of last Wednesday. So, last Wednesday, big flush here for the market, SPY, the Qs, and the big flush really came from the big spike in volatility over here. So if you check out the VIX, last week, get the big spike here Wednesday into Thursday. So the big spike in VIX is VIX goes +2 to +3 ATR to the upside. As VIX is making that move to the upside, it's usually going to be met with a move to the downside in the indexes. Usually, the index is following a good -2, -3 ATR. So that was the scoop there last week. The most important part of this chart here, not even so much the big spike, but what followed it, a quick move back down to the 21. So if we go back to the chart here of the overall market, volatility spikes, VIX runs 3+ ATR, market falls about -2 ATR, but into the end of the week, we're making a move back towards the 21. Really impressive bounce there last week. So if you look back at VIX here, the biggest thing that led to that bounce was the fact that volatility died back down. Had VIX instead hung around +2, +3, or, goodness gracious, or kept on pumping here. If it kept on pumping, the market would have kept going lower, and if it just kind of hung around +2, +3, the market probably wouldn't have bounced like that. The market bounced really well because of the move back down into the safe zone for volatility. So if you look at today's session, you get the +2 ATR move here for VIX, big pump into the open, and what does the market do? Market starts falling towards -2 ATR. But towards the afternoon here into the end of the session, VIX dies right back down. If we look back at the indexes, we're going back and forth here, gang. Check out the indexes. VIX spikes, market goes a little bit to the downside, volatility dies back down. Nice bounce back to the upside for the market. So it's going to be interesting to see if we get that follow through pretty much like last week. And a big part of that is going to be whether or not VIX does stay there, away from +2, +3. The lower VIX goes, the better the odds of a nice bounce of the market. Let's put it that way. But as far as other things to focus on, let's get rid of those drawings real quick. So you do have the daily squeeze here for the SPY, which again, getting a little bit sketch here today, but we did finish the session basically at -1 ATR. So in other words, really not all that much happened here today. So the daily squeeze in the SPY, if we can see the index getting back above the 21, if we can get the positively stacked moving averages back on the chart here, if we can get the green 10x bars, and if the histogram on the squeeze can go from red to yellow to light blue, nice shift of momentum, then I think you can see this daily squeeze take us back towards the highs. So as far as things to focus on, what has been leading the market as of late, well, it hasn't been technology. Right? This technology's been slipping. It hasn't been the semiconductors. As the semis have been slipping, what's been pulling this market forward is rotation into sectors like the financials, into the energy sector, the industrial sector, the transport sector. So those are the sectors that have been carrying the way here. And I do think you still look for opportunity here. So with a daily squeeze in the SPY, this pulled back to the 21 for the transports, there could be some opportunity there. Personally, I like the industrials, mainly because you got a fresh daily squeeze, not just in the index, not just in the sector, but in the individual names within the sector. So with the mindset here that VIX comes back down to earth, we get a little bit better structure here to the squeeze in the SPY that could bring us to new highs. And I think you look for continuation in things like the industrials. So within the sector, in the options room, we got a position right now on Caterpillar. Good price action here today. We get the little flush of the market, nothing serious. If you throw the Keltner channels up, I don't even think it went under -1. It didn't even touch -1 ATR. So keep in mind, a squeeze is basically designed to find that moment in time. When a stock is in such a tight, narrow range, it can't get above or below +1 or -1 ATR. And ultimately, squeeze fires long, you're looking for that +2, +3 move. So Caterpillar is a beauty here, and for CAT, we got a June 11th expiration put credit spread. Assuming everything holds up tomorrow, we're going to go ahead and add to that position. We got short strikes at 235, so I think Caterpillar looks pretty damn good here. I think Triple M good looking squeeze. And again, didn't even touch -1 this morning. So still has the structure. And with the daily squeeze in the SPY and the industrials, I think you can take a look there at some triple M. But here was one interesting observation about today before I let you go. Tech has been slipping, semis have been slipping, industrials, financials, energy, transports, they're pulling the market forward. If we look at the different sectors, though, from today's session on a percentage basis, percentage change, technology finished the day up, let's call it 0.5%, right? Give or take a few cents there. Tech finishes the day up 0.5%. The semiconductor sector, kind of like Undertaker here, just rising from the grave, up almost 2%. And then the sectors that have been leading, the industrials were down 0.5%. They finished nicely, but down 0.5%. Utilities, flat on the day. Financials, down about 0.5% in change. Energy, down 2.5%. So here's the interesting observation. The sectors that have been leading the way, they basically all pulled back to their 21 EMA. So they were down on the day where the Qs and the semis, the two forgotten sectors, they carried the way forward here today. They had the best percentage change compared to yesterday's close. So the only reason I'm bringing that up is it's going to be interesting. And I got Caterpillar. I like some triple M. So if the daily squeeze in the SPY fires long, you probably see the industrials, financials, etc. You see all those stocks continue their bullish trend, most likely, I would think. But at the same time, though, with tech and semis taking the lead here today, it is going to be interesting to see if those can come back into play. So if you look here structurally at the Qs before we wrap it up, the biggest level of support or the biggest level to pay attention to is going to be your weekly 21 period EMA. So if we go grab that bastard real quick. All right, so I've got the weekly chart up, and generally speaking, you still have a bullish structure. If you think back to early February into March, we had a really good move. We pulled back to the weekly 21, and we held up there for a few weeks, but you held up structure. On a weekly basis, you never closed under the 21, and though the move back to new highs didn't come immediately, that was a key level of support to hold, as the bullish structure was still intact. So if you look at where we are now, flushing to the 21. We're breaking it a little bit here today. If we can go into Friday's close with a close here above that weekly 21, tip your hat there to the Qs. I think that's pretty solid structure on a weekly if we can hold there. And then on the daily chart, it's a matter of, can we get back above the daily 21? So, you still got to be careful here. They look good today. The weekly chart is holding support. But as long as you're under that daily 21, you got to be careful. Does that bounce back to the mean? It might be nothing more than that. Little bounce to the 21 after you're hitting -2, -3 to the downside. If we can start closing back above the moving average, now I think you can see the industrials, the financials, and technology, and the semiconductors. I think you can all see them moving on up there. So a couple things to pay attention to. Hopefully that all makes sense there, friends. But, in the event the Qs do get it together, check out Google. So if we look at Google here, now, it's not the best looking daily squeeze in the world, so I'll be the first one to admit that. But I did pick up a little bit here yesterday because I want to be balanced. I want to be long a few good looking charts. I want to be short a few good looking charts. So, you look at the daily squeeze back here for Google, it behaves perfectly. Remember, the squeeze is going to find those moment in times when a stock is just, trading in such a tight range. It's +1, -1, +1, -1. There's your buildup of energy. Then you get the release of energy. So the main point here to take home is that when you're trading a daily squeeze, and this is just my opinion, you can't be shaken out of your position on that little kind of lame price action that's taken place between +1 and -1. So for a lot of us in the options room, Google's been one of the better trades of the year back here in the daily squeeze. And we had to sit through a whole bunch of choppiness, but using the Keltner channels here, none of that choppiness changed the structure. So if you look at Google here, we got the daily squeeze. I'm taking my entry yesterday as we're above the 21. We gapped down this morning, but it wasn't all that meaningful. It's just noise. It's doing what a daily squeeze basically should be doing here, which is +1, -1. So still holding on to some Google, but I think if the Qs can recover, potentially something to add to there. I'm going to keep it a little bit easy for now on the position sizing, but I'm long Google. I'm long Caterpillar. Would really like to add some of that tomorrow if the market holds up. So Pretty good chance I go on ahead and do that. And then I am short a few stocks here. I'm short Hubs. So Hubs, bearish structure here to the daily chart. So like I said, I'm trying to be balanced. Long a few good looking charts, short a few bad looking charts. And this fits the bill of something I want to short. No positively stacked moving averages, red 10x bar is in the squeeze. We're under the 21 with a negative histogram. Of course, it could bounce from here, especially if mama market is strong. But with the structure, I'm looking for the daily squeeze to end up leaking a little bit lower, and I'm looking for -2 to -3 ATR. So 445, 420 kind of range. So I got the call credit spread with short strikes at 520 on Hubs, and then on Datadog, we got a short here based on the weekly chart. So let's throw these suckers up. So the weekly chart here for Datadog, bearish structure. Under the 21, under the 8, the moving averages are not stacked positively, and then there's a histogram just running like a bloody nose. So got the call credit spread here on this one. And being balanced means that tomorrow the market might rip towards the upside, and your short positions are coming against you. But we got the long in Google, we got the long in Caterpillar, we got an iron condor that would benefit from a bounce tomorrow. Just be balanced right now. Interesting times in the market. Be balanced. So that's what I'm working with. That's a midweek update. As far as what to pay attention to here for Thursday and Friday, we started tonight's video with kind of a look at what happened last Wednesday and comparing that to what happened here today. What happened here today? If we're going to get similar follow through like we saw last Thursday and Friday with the markets finishing the week really strong there, you want to see VIX continue to drop lower, ideally back towards a 21. So be safe, y'all. Be good. I'll talk to you. Let's see. Today's what? Wednesday? So I'll talk to you Friday in the weekly recap video. But if you haven't already, go on ahead, smack that subscribe button. And of course, if you want to subscribe to the premium newsletter, then you can get some awesome videos that are a little bit longer than these. And you can hear my spiel over and over again. So enjoy your night. Be safe. Talk to you soon.